All right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about HIVE Blockchain, stock ticker HIVE. They are a Bitcoin and Ethereum mining company. We talk about the miners a lot on this channel, so if you enjoy that content or if you're new to the channel, please subscribe and hit the notification bell. Also, please do us a favor and smash the like button. Feel free to leave a comment below, and in the pinned comment, you will see a link to our free Discord. So I want to talk about HIVE today. I want to talk about their March operational and mining update, but I also want to talk about some stuff that they have said in there and their philosophy on what they're doing, because it is a little bit different than all the other miners, and I think it's important that everybody understands what they're doing. So I want to go through that. I want to go through their report. I also want to look at their financial statements a little bit, and then we'll take a look at the chart and see what's going on there. We'll start out looking here. HIVE is trading at $1.81.5. So that gives it a market cap of about $770 million. And you will see later when we get to their production levels, this market cap is significantly less than the companies that are producing roughly what they're producing. Okay, so here's their press release dated April 6th. HIVE Blockchain provides March 2022 production and Intel update. So that is another thing. They are buying the new chips from Intel. So we'll talk about that as well. That was a major investment on their part, and that is going to double their exahash rate over the next year. First, they give their March 2022 production figures broken down between their Bitcoin production and their Ethereum production. So I'm not going to spend a lot of time on this because they consolidate those, and it's a little bit more meaningful comparison, but let's just look. So straight up Bitcoin, they produced 278.6 Bitcoin in the month of March. They're at 2.0 exahash of Bitcoin capacity. They produced 2,459 ETH in the month of March, and they're at 4.58 terahash of Ethereum mining capacity. And they went from 4.58 terahash of Ethereum mining capacity at the beginning of March to 6.1 terahash of Ethereum mining capacity at the end of March. So they did increase their capacity in Ethereum, and about 35 to 37% of their dollar value of what they mine is Ethereum. When we combine those into Bitcoin equivalents, they mined 447 Bitcoin equivalent in the month of March. That is the third most of any publicly traded company. Core Scientific, of course, mined over 1,000. Riot Blockchain mined 511, which was their all-time record, and excluding Core Scientific, that was the all-time record for all the remaining Bitcoin miners. And HIVE was in third place ahead of Marathon with 447 Bitcoin equivalent. So this is one of the things I want to look at. Marathon's market cap is between 2.5 to 3 times that of HIVE, yet currently HIVE is mining more cryptocurrency. And again, that is just one measure. There's a lot of other reasons for that, so I'm not saying that's a one-to-one correlation and the price of this stock should triple just to catch up with Marathon. Frankly, I think Marathon's undervalued as well, so we'll get into that when we look at the chart. So this is the chart of their progression of growth. The dark blue is their Bitcoin mining, the light blue is their Ethereum mining. So they say the company will be at 6.2 exahash BTC equivalent hash rate in 1 year, up from 3.3 exahash BTC equivalent today. So they're showing steady growth on a monthly basis, basically every month up until the next 12 months. Now, this only counts that which they have already ordered. So HIVE obviously has the potential to increase this by buying on the spot market over the next year as well, or making some new deals. And they do have a big deal with Intel, so I expect, and they have stated, that that deal will grow. So this initial deal with them, I think, will lead to further increase in Bitcoin mining exahash. So the deal they have with Intel is to buy ASIC mining chips. So that is for the express purpose of mining Bitcoin. Okay, this is an important part that I wanted to get to, because this really is what is different about HIVE than all the rest of the Bitcoin mining companies. Hut 8 does mine some Ethereum. It's a much smaller percent of the total of what they do, and they immediately convert it to Bitcoin upon being mined. And again, it is not anywhere near at the magnitude that HIVE does, so it's a small percentage of their business. HIVE, like I said, has about 35% of their business mining Ethereum. So they talk about this right here because, as you all know, it is the expectation that Ethereum is going to move from proof of work to proof of stake. Some people are talking about as early as June, which is just a few months away. So I want to let you know what they're saying about this. Over the past year, our Ethereum hodl position outperformed our Bitcoin hodl. ETH is much more volatile than Bitcoin, and once again, we have used the volatility volatility to generate capital to expand our operations. So they have been selling their Ethereum. They're not selling the Bitcoin that they mine. They're holding all of that. We have sold down our Ethereum holdings to fund our Intel strategic relationship and the building of our rigs. So remember, when they buy chips from Intel, unlike all the other machines in the marketplace, they then have to build a machine to put the chips in. So they have outsourced that with somebody familiar with Intel that has worked together, and so that is in progress. We are very thrilled about the Intel deal for several reasons, and due to the greater volatility of ETH, we have traded out approximately 10,000 Ethereum coins to fund the expansion in our Bitcoin channel. So they are mining Ethereum and they are using Ethereum to buy Bitcoin mining chips. So that right there shows you they are making a segue. However, still at this point, 35% of what they're doing is Ethereum. That number will go down a little bit over the next year. They are purchasing more Bitcoin mining equipment than they are Ethereum equipment. Further, we have expanded our daily ETH production to replace coins we have sold. Our long-term goal is to grow our Bitcoin footprint while using our Ethereum to help with this ambition. Our ETH production is allowing us to generate the highest margins from proof of work in the business. Their strict mining profitability is over 90%. That does not include depreciation. So that is energy and other direct costs. That is just about the highest that I can find in the whole industry. Profit margins in this industry are very good. So 80 to 85% is typical. They're over 90%, and that is mainly due to the fact that the Ethereum is much more cost effective to mine. Okay, so this is the important part of the conversation I want to talk about. So they then go on to say, we are not concerned about the 6-year narrative that Ethereum will become only proof of stake in the immediate future. So what they're talking about is, obviously this has been a work in process for some time. They're saying 6 years. Now, I will say that everything that I see and hear and read, the majority of people believe that this transition to proof of stake will happen by the end of this year. A lot of people believe it will happen as early as June, which is only a few months from now. The management team at Hut 8 does not believe that that is the case. And what they say here is that they're not concerned that ETH will become only proof of stake in the immediate future. So they're not denying necessarily the existence of the proof of stake concept, but it is their opinion that proof of work will continue indefinitely, in their opinion. And they're saying, as evidenced by the robust and secure proof of work consensus mechanism that has helped ETH process more transactions in US dollar volume at 11.4 trillion, where Visa has done 10.4 trillion in US in 2021. So basically, there's already more being transacted on the Ethereum proof of work than there is by Visa. So they do not believe that Ethereum is just going to abandon proof of work completely. Their opinion is either which way, it's going to take longer than everybody thinks, and then they believe that at the finish line, proof of work will still be a part of the concept. So again, this is not what I'm saying or thinking. This is Hive's management's position. Having said that, they are hedging their bets because they're selling their Ethereum and buying Bitcoin mining equipment. So they are transitioning over to Bitcoin mining more heavily than Ethereum. But in the meantime, the Ethereum is much more profitable, and they're using those profits to buy Bitcoin mining machines. So to me, this is one of the big things that is suppressing the price of their stock. We're going to have to see how all this plays out. I believe either way that it plays out, their stock, in my opinion, and again, please, this is not financial advice. Do your own due diligence. But in my opinion, either way this turns out, proof of work or proof of stake or some hybrid of those things, it would seem to me that Hive's stock price is undervalued right now. The other thing I want to take a quick look at is Hive's balance sheet, because I think this is important. Remember, their market cap's around $770 million. They have total assets of $487 million. So they have almost $500 million in total assets. They have over $250 million in current assets. But I want to go through some of these numbers. $63 million in cash. They still have $168 million in cryptocurrency. And again, that's mostly Bitcoin because remember, they spent 10,000 ETH to buy their ASIC miners, but that still leaves them with $168 million, and these numbers are as of December 31st, 2021. Their data center equipment, they've already spent $107 million on. In addition to that, they have deposits out of another almost $100 million. So this company has already basically purchased a lot of their equipment on a going forward basis, and even after all that, they still have roughly $250 million left in liquidity. So this is a very strong balance sheet. As you can see, they have 15 million in current liabilities versus 268 million in current assets, and total liabilities of 55 million versus 487 million. So, this is almost 10 to 1 assets versus liabilities, and it's more than 10 to 1 current assets versus current liabilities. So this is an extremely strong company from a balance sheet standpoint. So that's important to remember going forward as well. As they make their transition and as they're looking to add more computing power, they're coming from a place of strength here on the balance sheet. I'm not going to go through the income statement in detail, but like I said, they're over a 90% gross profit mining margin, not including depreciation. I think they're at about 68% including depreciation, and they're a highly profitable company. Their internal estimated forward PE is somewhere in the 3 or 4 or 5 range. So that is very, very, very low if it plays out that way. Now we know the trailing 12-month has already played out that way. They think that the forward PE is going to be even lower than that, maybe as low as 3 or 4. So that doesn't really make any sense for a small cap, high growth company that is already profitable. So that would be another reason that personally I would believe the price of this stock has some upward momentum going forward. Okay, so if we look at their chart, this is the Hive chart on the 1-day time frame. So each one of these candles is 1 day. Right now, today, they're trading at $1.82 at the moment, and this is midday trading on April 12th. So you'll see Hive has established a very solid line of support. Bitcoin is much higher right now than it was at these previous points. I see a reasonable downside risk of maybe 17% versus the first price target I'm going to look at is this white line. This white line was a line of support for almost the entire year of 2021. So even when Bitcoin was down at $29,000, Hive was above this $2.50 white line. So that would be a 35% upside versus a 17% downside. If Hive was to get back to where it was trading prior to the December 3rd Bitcoin flash crash. So Bitcoin was at about $56,000 at that point. Hive has grown significantly since that time. That was almost 4 months ago. So between that and what will hopefully be some recovery in the price of Bitcoin, this would represent a 90% growth in Hive's stock price if it was to get back to just this pre-flash crash number. This last one I'm going to look at is not a short-term price target. It's not even necessarily a 1-year price target, but I do think it's realistic at sometime in the next couple of years that Hive can get back to where it was trading on November 9th, which was the day that Bitcoin hit its all-time high at 69,000. So if Bitcoin can have a positive trajectory and be healthy over the next year and a half, it's not at all unrealistic to think that it can get back to its previous high, if not higher. So again, this is not a short-term goal, but this would be a 204% increase in the price of Hive stock. So you can see, in my opinion, as I'm doing the analysis, I see a lot more upside in the short term and the long term versus the downside risk. Of course, please, this is not financial advice. You guys need to do your own risk reward analysis and your own due diligence. So those are my thoughts on Hive. Thanks so much for watching. Please remember again to subscribe to the channel and smash the like button. Thanks so much for watching. We'll see you in the next video.